Ryan, how long did you spend in Indonesia?
It's about 4.5 years.
4.5 years. That's a long time.
Yeah, yeah.
And prior to that, you were in UPM, or you were doing your
UPM.
own?
Yeah, I
UPM.
was in UPM, but I was doing my own actually in the industry.
In fishery?
In fishery, also some in cattle industry, but predominantly on agriculture as a whole.
When you said on your own, you mean as a freelance consultant?
As a consultant, as a farmer, as a trader.
Okay. And you did some work with the United Nations?
Yes, that was in Indonesia.
Oh, that's the one in Indonesia. FAO was
yes.
it? Or?
It is actually under one of the divisions under United Nations, which is a smaller division under FAO, which targets more on agriculture, understanding and awareness and support group for Aborigines, rural areas, consultation and so on.
What agency was that?
It is actually UNSAD, United Nations Strategic Agriculture Development.
UNSAD.
Yeah.
I'm not familiar with them. Okay. Okay.
So technically, it's UNSAD, means set is UNSAD. Yes. Yeah.
Yes. So that makes you 40 years old now.
38. You can't make me that old.
All right. All right. I'll give you the benefit of doubt. 38.
All right. Thank you.
Okay.
Hello, sikit, can we start sikit? Sikit, can we start? Okay, yes. Yes, can we start?
Hisham?
Yes, can we start right now? Yes.
Ada berapa orang yang dah sampai?
So far 20 dah login dah. 20. Yeah. 20 dah login.
Yes, okay, I can start. And when I start, I just introduce everyone.
Yes.
Okay.
Yes,
okay.
Yes.
Good. Ryan, are you ready? I shall introduce you and
Yes,
welcome
yes.
everybody to this
I think
one.
I think no need, just introduce speaker only.
Yeah.
I think. Okay.
I also need to introduce and welcome everybody to come in.
Yes.
Yeah. Okay, let's start. Put me on now. Are we on?
Yeah, yes, we are on. You can start. You can start now.
And the participants are on already as well?
Yeah, yes. Participant already.
Okay, very good. Good morning, everybody. welcome and thank you for joining us on today's webinar. The webinar has been a series of these programs with the Nexus programs, and today we want to talk something different away from the agriculture, production, and some of the other supply chain area. This is an area that has not been very much debated and talked about by the stakeholders of the agri-food, and I'm talking about agri-food insurance. And you know, when it comes to insurance, various individuals have got their own perception about what it is and how, you know, how it works. And you know, very often people always have a very negative attitude towards insurance, but I think that is not quite correct. And today we have Dr. Ryan. He is engaged with the Archipelago Insurance Company, and he will debunk a lot of the ideas or false ideas that we have about insurance, particularly on agri-food insurance. So it is interesting that we can now look at insurance with a different perspective, also because in this environment that we have with the post-pandemic situation, a lot of people have been asking and saying, hey, you know, if I had insured my farm for this pandemic, I would have been in a better position now. I wouldn't have lost all of my crop for nothing. And I'm sure a lot of people are asking questions in that sense. So it's very timely that Dr. Ryan is talking to us about agri-food of farm insurance today. And in the course of Dr. Ryan's conversations, if you want to bring up any questions concerning the presentation or towards farm insurance, type in your go into your question there and type in your questions, and Dr. Ryan will attend to it. I will be moderating this whole conversation this morning, and I will take up your questions and bring it up to everybody's attention, and let's hope they get to be answered sufficiently by Dr. Ryan. So a short word of Dr. Ryan. Ryan is a professional veterinary consultant. He's a product of Malaysian UPM, so we are very excited about that. He's very well traveled in countries outside the country, and he's worked for something like 4.5 years in Indonesia as seconded as consultant with the United Nations. He is very much into the commercial practitioner part of animal husbandry in fisheries, and he says here big animal activities. So not small. He doesn't play with a little mouse, but he plays with the big animals. So right now he is with Archipelago, working on agriculture, insurance development, and underwriting. So let's listen to Dr. Ryan and find out more about this insurance. So Ryan, you have something like 30 minutes, 35 minutes to tell us a little bit more about agriculture insurance, and then later we'll spend some 20-25 minutes to see if we can resolve some of the doubts and questions of the participants. Okay, so right. I hand it to you now, Ryan. Right. Thank you.
All right, thank you, Mr. Keith, for the introduction. It was a very good one. All right, good morning, and hope all of the viewers today is happy that the MCO is been lightened and we can start traveling. Okay, so the topic today is quite interesting actually, as what Mr. Keith has stated earlier. So usually when we talk about farming or even agriculture, the idea of insurance is something that seldom farmers will think about, considering that how can livestock can be insured and what do I get from it, in what ways, what kind of coverage is offered to me. So these are the questions, variable questions that is always be there for a farmer. So what I'm trying to share with all of you today is, I'm not going to sell anything today. So practically, I'm trying to share a seed. I'm going to share a seed. The seed is actually a concept that hopefully those joining us today can assist me and MPC to fertilize it, fertilize the seed and the concept to ensure that it can be flourished as a supporting mechanism for Malaysian agro-food industry. So what is the seed is all about? It is actually agro-food insurance. So it is a concept that is already in the global market. Most of the developed countries practice agro-food insurance. There are some Asian countries who already have done their agro-food insurance on a farm level up to a government level. So I would try to share bits and pieces of awareness and understanding about the agro-food insurance. Not too detailed, I hope, so we can actually accept the first webinar we have today as a more on a sharing concept, a discussion, and help you to understand more about this agriculture insurance. Hisham, can you go to the first slide, please? Okay, so as you can see on the slide, I'll not be reading the slides to you today, but what it's telling us is it is a very foreign concept. The agriculture insurance itself is a very foreign concept because when we are developing a farm, it's the least concern to any farmers. So the main concern is always what is our fingerlings, what is our seed, what is our cost of production, the cost of input, and the second will be the marketing. So where do we sell our products? So these are the main concerns that we have. So seldom we think about how do we manage our risk, what is our exit strategy when we are having our farms. So that is why usually insurance related to agriculture is a very foreign to us. So, but let me give you some kind of metaphor on this, and it also explains and answers Mr. Kidd's concern on why sometimes we tend to be very negative towards insurance. All right. Let's say I can give you a metaphor, like usually there's a myth about agriculture insurance, right? Why should I be paying an insurance premium? And whereas in some cases for the entire year, I'm not going to have any claims because I practice very good animal husbandry or farm husbandry, then I don't get anything out of it. All right, so this is a normal myth that is going on in the even in the global market. But let me throw you some kind of a metaphor today, right? Most of you have heard about fire insurance, or even let's take something simpler, motor insurance. All of us buy motor insurance or vehicle insurance for our car, our mobile, and so on. But when you are paying for that premium, are you expecting to get into an accident? I mean, just I'm throwing to the floor. Are you actually expecting that you have the insurance? Are you going to have an accident? Do you want to be involved in an accident? Certainly we don't, but we still keep on paying every year. Why? Because the idea of having the insurance is you don't want to be suffering for financial loss or any worse conditions when it happens. So having said that, a fire insurance or a motor insurance can contribute a general principle behind an agri insurance. it's pretty much the same. So the amount of premium you are paying for agriculture insurance should not be burdening a farmer in a way such that in the event that you are facing a loss in your farming, you are saved. It acts as a safety net to you. It acts as a cushion to you when you have that fall. So in a big picture, it's actually a very important risk management tool that you should incorporate on your cash flow when you are doing your farming. This is very important. So most of the cash flows for agriculture, we talk about medicine, we talk about treatment, and we talk about many other things, even fencing. These are the considered your measures. How do you want to prevent your farm to be having any loss due to pests or predators or anything? But there's another way that you actually can manage all these risks, which is insurance. So that's the big concept about this. And a very good example of why insurance is very good in agriculture is actually the concept of vaccine. I like the idea of vaccine because you see, I mean, we are going through a COVID situation now. Everybody is waiting for the vaccine. But the general idea of vaccine is actually you need to be having a condition first, or a disease must occur at a severe condition in order for us to create a vaccine, so that the second outbreak or the second or the third outbreak, you can be protected. So if I may say, insurance works exactly the same way. You must identify for any farm sectors or farming sectors, you will know what kind of loss or historical loss that you already have. But how do you vaccinate yourself? How do you protect yourself? Because you can't control. In some losses, you can't control. For example, like a disease outbreak, or even a weather conditions like tsunami, flood, and so on. This is unpredictable. But how can you vaccinate yourself? I mean, of course, you can do fencing, you can improve the geographical location of your farm. This can be done, but you also need something to safeguard your financial loss and rebounds as quickly as possible. That's why the topic today has a resilience words to it. It's how fast can you rebound when you are facing a loss. That is very important. So that is the general overview that I would like to share. So hope that you can think about the idea of vaccine and how insurance acts like a vaccine. Hope that metaphor is good enough to explain generally how insurance works. All right, Isham, next slide, please. Okay, so the general objectives of agriculture insurance is actually it's a risk transfer mechanism. It always works as a risk transfer. So usually what will happen is when we are insuring a farm, we are trying to be part of your investment portfolio as well. We are actually your partners. So what will happen is we are trying to transfer your risk, certain portion of your farming risk to us for a premium, so that you will have maybe a small probability of a loss, but the impact is a big loss. So the probability is small, but the impact is quite big to you. So this risk must be transferred to an insurance company in order for you to be you have a comfort of mind. You can actually handle the other operations of the farm without having thoughts of what will happen if maybe another region closer to you is suffering from an outbreak. You will be in fear. What if the outbreak arrives at your region? So you must have a peace of mind to operate your business at every time. So the risk transfer mechanism is important. So what generally it can do is actually overall the end goal, it can actually reduce the poverty. It can actually help you to reduce the severity of any events. So of course, in most of the cases, they are uninsurable elements, because when you're talking about farming, there are many kind of risks. In some cases, the insurance company can't insure that because it all depends on the husbandry practice, certain biosecurity guidelines, or even it is because it's very congenital to that particular type of business. So, but the reducing the severity of events is good enough to ensure cash flow is protected. And finally, when we are managing the entire agriculture sector as a social, big social community of agriculture is safeguarded, what will happen is we can actually have a very sustainable food production for the nation, because of the resilience is built, and in a way it will also improve the productivity. I will tell you an interesting concept about how agriculture insurance can actually help the productivity, maybe in the slides towards the end. All right, carry on, next please. Okay, so why insurance? Actually, I spoke about this a few slides earlier. So because of the agricultural production is actually a very great importance for in the economics of any country, and Malaysia itself was agriculture very famous and a very big agriculture nation years back. So but there are a lot of risks and challenges that has been we have been facing for all these years. For example, just something that most of you can pick it up from the internet as well. In 2007, due to floods, Malaysian farmers overall, the agriculture sector has faced almost 70 million losses. So it's a quite a big sum. And to make it worse, in 2015, under the same flood condition, we have faced almost 299 million. It's almost 3 times, and it can be predicted. You know, flood can be predicted because it happens every year. But there's no safety net for this. That's what I'm trying to say. So what we need to do is we need to have the involvement of everyone here. Let the seed grow and support to come out with an effective safety net that we can actually safeguard our agriculture industry. And in a way, it will support our food security and also the productivity. This is very important. Usually what happens is the smallholder farmers in particular will be the more concerned areas of this, because they are affected in a very big area. It works very simple. You know, the smaller farmers will receive the highest impact in any conditions, and we need to bring them in as a whole community of agriculture. That is the idea. All right, next slide please. Okay, so generally, agriculture risk can be divided into many kind of risks. All right, for the sake of discussion, I just bring in 3 major risks that we can actually discuss about. The first risk is actually a normal risk. Okay, a normal risk is actually on the farm side itself. Means it's always the farmer's responsibility. So when you are operating a farm, there are certain risks that must be understood earlier. It can be from the beginning of you starting a farm, the land, the soil content, if it involves a crop, or it can be something related to a pest or predator damage. If you're operating cattle farming very close by to a forest, then you have a predator damage. So these are the normal risks that you need to address. The farmers need to address themselves. It's a responsibility of the farmer to build fencings, to have a filtration system if they are getting the water from a stream, or even groundwater. So there's different methods that you need to practice on this. All right, this is the normal risk. So the second famous ones are the marketable risk. So the marketable risk is the one that insurance company can come in. So this can be a big portfolio of weather condition issues, even outbreak of diseases, and in some cases we can actually look into an individual farming risk, such as a transport risk or even a localized disease and so on. So the marketable risk must be studied on a farm level as well as a regional level. So we understand how to manage these risks, and it can be transferred back to an insurance company. And finally, it's catastrophic risk. So catastrophic risk is a national level risk. So in an event like a pandemic, in an event like a tsunami, drought, elongated drought, and so on, these are very catastrophic, where the amount of loss is undefined. So for this level of risk, probably the entire agriculture sector will be affected. But how can we mitigate this? It's actually doable if we can actually have the support of the government, the stakeholders that involved in the agriculture industry comes together and build a very strong network and a safety net to protect the entire agriculture community, to safeguard them from catastrophic. Because in the event of a catastrophic loss, what is important is how fast can we rebound. That is always the question. The question is how. It's not about repaying the farmers or giving out a good payout for them to sustain their life. That is not the issue here. The issue is how fast can we restart the agriculture industry after the event. This is the most important thing. All right. Next slide, please. All right, so having said that, so usually insurance is a holistic risk mitigation strategy. So let's say we have these three: normal risk, catastrophic risk, and marketable risk, but how to mitigate this? So the mitigation is actually a mixture of the current husbandry practices or even biosecurity guidelines that is provided by the government or the government agencies must be implemented. And then the insurance will come in and support and use that policies to build an insurance product around it. So one of the discussions that I had with Mr. Kit much earlier before was how can having an insurance improve a farming cash flow or business plan? It's actually a very good question, actually. So how can I explain this in a very simple and presentable way is, when we are doing insurance underwriting or even providing insurance on agriculture, for agriculture, we always assess your biosecurity guidelines. What do you do? Who is your workers? How experienced is your workers? And what kind of management skills that you have? And how do you manage your disease controls? How do you manage your feed and so on? So all these details are as important as providing you a coverage. And in most cases, we would use your biosecurity and farm SOPs as a standard guideline in order for us to assess any claims and even do any payouts. So in a way, insurance company can act as an inspector. We are the QC inspector. So if you do not follow the guidelines that you supplied to us, then we are unable to pay you any claims. So it's actually an inspector that makes sure you follow the right guidelines. So what will happen is, you have a very good farm with a very good husbandry, and you practice all the government policy, because you need to ensure that when there's a loss, you are able to do the claims. So that's how I can actually answer if it's on the productivity or how it can actually improve the program itself. All right, next slide, please. Okay, based on this topic, I've come up with some kind of solutions that maybe it's open up for discussions and so on in future. But understanding the current situation of agriculture in Malaysia, I believe we should be working on a cost-effective insurance programs on a catastrophic level first. So because we are in a position that we have flood and in drought, some areas in Malaysia facing elongated drought, and for aquaculture there are problems of algae blooms or water problems. So this can be placed in a catastrophic risk and developed for a national level. So all the farmers will be part of this program. And secondly, it should be priced in such a way that it takes up different levels of payouts and minimal damage to the current cost of production. Because usually when you talk about farming, 70% of any farming is actually the cost of production. So there's feed costs, management costs, and so on. So we should be able to price it in such a way that it creates a very minimal charges, but at the same time, it provides an incentive to the farmers to improve their way of farming and even the selling price eventually. And thirdly, there could be a very idealistic way of doing this by coupling the insurance with educational programs or even new policies in terms of bringing new methods of farming. Currently, we are going into more revolutionized digital farming. There are talks about smart farming, even precision farming that involve with very high-tech solutions. So we can actually embed and bring the new technologies and advancement in the global market and couple it with the insurance. It provides a better and puts Malaysia upfront in terms of having a digitalized insurance business in the region. And finally, a disaster-linked cash transfers to offer a very quick and targeted, especially on the staple food producers. So this is a very unique solutions for staple food. So I'm sure we understand that in Malaysia we have different self-sustainability level for each of our staple food, for paddy, for rice, beef, and fish as a protein source and so on. So how do we protect ourselves against this staple food loss? So we need to have a disaster link that offers a fast solutions to this staple food control, because in any conditions like a pandemic or what, how long can we sustain without any importation? So this is a very interesting thing to dwell with. So it is a very problem solving and also troubleshooting required in order for us to create such product. Okay, next please. Okay, so this is an idea. So what we intend to do is actually to come up with an agro-food care initiative. So can be called anything, but the idea is actually to create a framework of what all the risks that Malaysian farmers are facing into one umbrella structure. So let's consider all the catastrophic risks, the marketable risk, and even a normal risk can be coupled into a very unified umbrella concept. And we have a different solutions for each sector in the agriculture industry. And it's also matches with the current government policies, the guidelines, and even support from the financing, agriculture financing, microfinancing, and so on. Because in most cases, when we are talking about microfinancing or even grants, there's always an idea, what is the exit strategy from the person that has the money? Okay, you have a farm, you have a very good cash flow, but how do I know it's going to be good in the next 6 months or even 1 year? So insurance becomes a very important tool in wrapping the entire cash flow for your farm. It provides a safety net for the investors or for banks to support you. because in the event of loss, the initial capital or the investment is protected now. So that is the idea of this scope, and the outcome can be actually to help the farmers and assist the farmers together with government and the agency involved with government to manage the entire agriculture in Malaysia as a whole and build resilience, start building the resilience. So currently what's happening in the market is resilience is hard to build. In any case of any loss, it usually takes a longer period for the farmer to restart the business. So that's why when you're talking about productivity, how insurance can help the productivity, is actually how fast a farmer can start the business back. Okay, let's say I give you an example and another metaphor on this. A farmer that faces a loss will have to fork out his own money to restart a business. Let's say a fish business. You have to buy in a new fingerlings and clear the ponds and start rearing it again. So it's maybe another 3 months and 6 months. The delay of 3 to 6 months because of the first initial loss can lower the productivity for that region or even for the country. The market becomes less of this particular farmer's product, and the demand is high, and of course the price goes higher. So this eventually is a pathway of loss going to happen for the entire supply chain. That's the first rule. The second rule is actually what's going to happen is, let's say if that particular farmer takes up insurance, when he has loss, he'll be compensated. So he can actually use that claim payouts and start the business quicker without actually paying from his own pocket. And by keeping that money in his pocket, he can actually opt to expand the business now. So the idea is not to use your pocket money to control, to be self-insuring yourself, but to use that as an expansion capital. So it creates a bigger portfolio of his own business in the future. So transfer the risk to another party that actually will support you as well. That is what I'm trying to say. And the final goal is actually, the goal of this Agrofood Care is actually to build resilience, in short, to build the resilience of Malaysian farmers, and secondly, to improve the productivity of our agriculture food industry. All right, next. Sham, next. I think that is the last slide, I think. All right, the summary. Okay, so just a quick summary. So insurance is only valuable if it compensates the risk that will have effect on the production. So you need to put yourself in the shoes that, okay, I'm trying to get insured because I want to be valued, considered valued. So you are giving yourself a value by having yourself to be insured. That is the summary of this. So if you have a very big farm, the value of your farm must be insured because you want to protect the investments that you have put in. Do not consider insurance as a way to make money, or even to be like is something that must be thought wisely and considered valuable tool to protect your initial investments. This is very important. So in most cases, we do not think about having a cushion when we fall, but for agriculture, I believe having a cushion is very, very important. And another way to put it very simple is consider insurance as a volatility smoothing. Means because cash flow is very volatile. Agriculture industry is very volatile. We have price changes, we have supply and demand changes, and outbreaks and so on. So how can you smooth this on your cash flow? How can you smooth this on your profit earnings from your farms? So insurance can be a tool that can actually help you to smoothen the volatility of your industry. All right, I think that's the end of my deck. So I think it's good to have more questions, then we can actually talk about it more rather than I speak one way on this today. I pass over to you.
Yeah, Ryan, thank you very much. That was very interesting. Listening to you gives me some kind of hope, because I mean, I've been a farmer myself for the last 30 plus years, and if I were to look back in my own experience, every day seems to have been a very daunting day, because you wake up in the morning, you look up at the sky and say, good God, is God going to look after me today? Or was something bad to happen to me today? And I think a lot of farmers all over the world, they have that kind of premonitions, you know, when they start the day. And this is the whole nature about farming, because when it comes to farming, you are working against a multitude of uncertainty, except for that the sun will rise. Yeah.
Yes.
Certainly the sun will rise, but then the clouds will come, the rain will come, the flood will come, or if the rain don't come, that's also another problem. So again, when we look at insurance, as you have explained it, I have this to say: insurance is something we don't want it, but we need it. And this is going to be even more pertinent when we think about climate change, because the risk of climate change, and I'm not going to go back into asking the question, what caused and who are the ones at fault due to climate change, okay? I mean, that's another conversation. But with climate change, so much of uncertainty beyond our expectations, and so much of this comes into the risk that is not in our understanding that we can calculate. Are you saying, Ryan, that insurance can help alleviate the issues of climate change that all farmers in the world today are facing?
Okay.
It's a question to you, Ryan.
All right. Good. It's a good question actually. So, how can I answer this? Is very simple. All right. The first rule of insurance is we need to have a measurable risk. So the risk must be measurable. So although it can't be predicted, but it must be measurable in the into a quantum. What is the quantum of loss that is going to happen in the event of any large loss? So particularly for climate change, there's a new form of insurance in the market, which is parametric insurance, or some will call it index-based insurance. So index-based insurance is a very cool. I think it's a very cool way of doing insurance when it related to weather conditions. It's actually quite a new concept where we can actually dictate what is the loss when a farmer is losing out rainfall by MMs, or they are facing droughts more than certain days or periods. What is the amount of payout for them? Will the yield goes down? So what are the amounts that we should be paid out? So there is already this product in the market that is useful when we are talking about climate change. It can be justified, it can be measured to ensure the cash flow of any farmers, especially crop farmers, is protected well enough. So easiest way to say is insurance is very close to cover almost entire risks available in the market right now. But I think this is the best answer I can give you. There's already a product answering to the climate change.
Okay, that's comforting. So basically, to go into this area of unknowns in the climate change, I think there's going to be a lot of areas that you're going to focus and package the risks and problems in such a way that you can measure them, as you explained just now. So I think, ladies and gentlemen, when we listen to Dr. Ryan speak like this, we have to start thinking differently in the way we run the business in our farms. Because in the past, when somebody starts farming, he thinks about it as a lifestyle. Some people take up farming simply because they couldn't think of anything else to do with their lives, career. And some people just go into farming as a natural course. But listening to Ryan here, it makes us think that going into farming now, it's actually a business. And it's not just business per se, but it's also a scientific business, whereby all the unknowns are now going to be calculated, and all the risk that we have always been fearful are all going to be factored now. Something that we have to think about, put a number to it, and get it insured. Now, I have a question here from the audience, Ryan. It says, the insurance premium, would it be competitive, sufficiently competitive, vis-a-vis the cost of farming and the yield? So I guess the person here is asking how much of that premium he would have to pay. Is it based on his yield, his size of farms, or the risk itself? How would you answer that?
All right. Okay, that's a good one. So generally, because of agriculture have multiple different sectors, you see there's crops, there are livestock, and livestock can be divided into cattle, pig farming, or even poultry, and there are a lot of these different. So each of these agriculture sector carries a different way of risk assessment, and risk assessment will promote the pricing of a premium. What are the premiums to be provided? There are standard guidelines in the market about what is the general principle of giving out a premium pricing. But to answer that question, usually we will require what is your turnover, what is your cash flow for the project, your business plan. If it's a new business or if it's an existing business, we'll request your 3 years financial reports and so on. Why do we need this? Is not to overcharge you. I mean, we are looking, oh, you're making a profit of this, and we can actually know. It's actually to understand what is the cost of your farming, and from there we will try to provide a premium that it's not going to be heavy, but just a minimal changes on your how your cash flow will be projected in the future after you take in the insurance. Because I'm not going to say that you will get it for cheap, but you will create a minimal changes on your cash flow. But you need to look at it as a long-term goal. It's something like what I mentioned earlier, it's like a fire and so on. The premium is always calculated against the amount of the risk. How big is the risk that you want to pass it over? What is the amount of the risk that you're willing to transfer to us? So if we are going to take a huge sum of a risk, so there could be a higher premium charges coming in. But usually in most cases, we'll go on a discussion basis with the farmer. We'll understand how good do you run, how good are you in managing your normal risk. If you can satisfy the insurance company that I have done all I can to mitigate all my risks, I have the highest fence in my area, my filtration system is the best, and so on. So of course your premium goes down logically. So these are the ways we can actually understand how a premium is built.
That's a wonderful response, Ryan, because you mentioned such that if the farmer is a good farmer, meaning that he's got all the food safety certifications, in his portfolio, and the insurance company actually respect farmers who practices good practice in his farm, in his fields. Definitely. And to actually mean it, you give him a lower premium. So yeah, basically,
that is the incentive. Yeah.
Yes. Sorry. So it's the same thing as when you have a life insurance. if you don't smoke, you don't drink, your premium go down a little bit of a notch. Otherwise, you pay.
Exactly.
So in this case, what you're trying to propose here for Malaysia, can you give us an example? There's a question asked here. Give us some examples of farm or crop insurance as being implemented in some countries that you are aware of.
Okay, so actually there's many countries in Southeast Asia that's already into nationalized crop insurance or even agriculture insurance. One of the good example is in Philippines. So Philippines has started their own Philippines crop insurance facilities. So they basically provide insurance for entire agriculture sector, from crops, from livestock, even to farming, machineries and so on. So I believe how they build the entire structure is very similar to what I have in mind. So it's like an umbrella structure supported by the government, subsidized. They have a layer of subsidization in Philippines, but the farmer will have to contribute themselves as well. But they must follow certain guidelines. They must be registered with the agencies and so on. Another good sample is actually our next door neighbor, which is in Indonesia. They do not have a nationalized product yet, but they have individual sector insurance. One of it is actually on the paddy scheme. So they have developed a first parametric pilot initiative in somewhere in Jawa Barat area. So it's a west region. So they have started conducting some pilot tests how to promote the insurance to protect the yield of paddy in Indonesia. Another area is a group of insurance company actually came about and built a consortium to protect shrimp industry in Indonesia. It's a consortium. So they try to have a better spread of the risk and start doing it. So these are the initiatives together with the government supported by the insurance company. So in Thailand, banks work together with the insurance company because there's an element of micro insurance and agriculture insurance. They needed another level of a collateral rather than having your land certificate and so on. They wanted to have your insurance certificate as well to enable for them to have a very strong understanding of your risk, and they can allow certain loans to be given to you. So I think these variable understandings of insurance in our neighboring countries. So it depends on how we like to look at it. Are you looking at it from the point of financing, we need to do it, or it's because these are the crucial sectors, like how Indonesia is doing. They find that because of the export quantum of shrimp is very huge in Indonesia, they would like to protect it. And Philippines, considering it's an agriculture nation, so they would like to be covered for everything because they are positioned in a region that is very, very I mean, because of the typhoons, because of the storms and so on. So they have to have certain risk mitigation tools over there. So I hope I answered that question. Yeah.
What about in the case for Malaysia? Are you in your knowledge any of such scheme available at the moment for Malaysian farmers that's been supported by the government?
Currently, no. Unfortunately, no. I know there's a lot of discussions and I mean, exposures has been done. I mean, studies about how to implement this in Malaysia for many years, but unfortunately, nothing is officially out there yet for the farmers to pick and choose. So I'm thinking this is because we need to conduct a lot of studies. We need to have a stakeholders discussion to address what is our need. Are we going to look at our staple food industry, or are we going to promote a catastrophic risk? Because this is something that the entire stakeholder of the nations must come together. That is what I'm trying to share today.
Yes, that's very important. I think you know, the listeners in this webinar, perhaps we can try to encourage a wider conversation, bringing in the government into this this topic of insurance, so that you know we can raise some kind of awareness, and if the government would participate, or otherwise, if not, maybe a consortium of other insurance companies can come into the fold, as you have described in the case of Philippines. But Ryan, listening to your presentation, it strikes me that the whole insurance scheme on farming, it's not only dependent on the farmer himself, but also very much on to the government, how they view agriculture. So I have a point here that says a more developed country could provide a better insurance scheme. Why do I say that? Simply because with more developed countries, the farmers are able to cultivate with better awareness of food safety, better awareness of certifications, and all of these are actually added value to their farming practices. An insurance company like yours would love to work with farmers like these. True. Because if not, then you have a farmer who is irresponsible, who does not take care of any of the work that he does, and just throw the blame and risk onto, you know, whoever he can blame on. So there's this 2 points here. The question would be, in terms of the moral hazard, would be those farmers who do not take the responsibility themselves. As to in a developed country or a better developing country, and in Malaysia particularly, that if the government were to promote, for example, my gap to all of the farmers, you would like to see that happening, because then farmers would become more responsible, they're doing all the right things. Would you in that case, you know, support these kind of movements and include these kind of practices and the way of looking at making the farms better farming practices in your kind of scheme? So instead of just selling to the farmers your policy, you are also selling them good farm practices.
True, very true. That's what Archipelago is trying to do anyway. Now we're trying to not only just sell a normal insurance for them, but we try to bring in and implement what is the current biosecurity guidelines provided by the government. We have our own policies, we have our own husbandries. What I try to do is bring that SOPs, bring that good elements into my policy wordings and enforce that onto the farmers. It's not to make the work of a farmer heavier or not, is to ensure that they become a good farmer. There's only one way to do this, is the hard way, because generally, even when I was doing farmer, we wanted to do it in an easy way. We wanted to just farm, harvest our stocks and get it done, get the profits in. But are we doing it in the right way? Hence, we are having outbreaks of diseases because we do not control about it. Some will actually avoid vaccination for the cattle because it's just time consuming and it's just costly for them. So, but how do we ensure this? There must be an inspector, or I mean, in schools we call it the prefects. We need someone to watch over our back, and having an insurance there, because you are paying for this premium, and you don't want to, like, okay, I just want to pay a premium, I don't care about the premium. But now I'm your prefect. Now I act on behalf of the government because I'm implementing government rules here. So these are the ways we can actually use to improve the farmers' quality, and at the same time the stocks of the farmers will be better. Yeah.
And in that sense, it also improves the productivity of the farming.
Definitely. Yes.
So I think we've got time for just one more question. And it says here, when you say that the marketable risk, so I think in terms of you produce a crop and you try to market it, and then something happens with the market structure. So pertinently, it's like the MCO that we came across in the last couple of months. A lot of people suffered not because of their doings, but because of the lockdown. So if somebody had a policy on the marketable marketing, would they be able to take this as a case somebody else caused the market to crash, and would the government become responsible? That's a case in the past. In the case in the future, if, say, for example, one of the regulatory agencies did not do their work as they should, and it was because of that, shipment of their product was lost. Who would be responsible, and how would the insurance look at this? This will be the last question.
Understand. All right. So it's a very good and legitimate question, but this COVID lockdown and MCOs is quite new to all of us. Even the insurance company, we take it as a very new area for us. To answer the question, to say yes or no, is going to be very difficult position for me. But I would say, if we have endure this process now, like I said in the beginning, vaccines, we have these conditions now, but in the future, we need to vaccinate ourselves from such thing to happen again. There is a way where we can actually customize or develop, engineer a product in the event such things happen again. So there is always a way option. So the idea of being vaccination is not only for your body, is for your business now. We have gone through this condition now. Now, what should we do next? So we have to go into a risk management study. We need to a market study. What are the implications of these lockdowns to the agriculture farmers? What is the price impact and so on? And what kind of product suits these kind of conditions, so that the product is available for future events, which we don't know when it's going to happen. So, but if we can use these conditions now as an area where we can study together with the government, it will be a very good opportunity for us. It's the best opportunity, I would say.
Okay, that's fair enough. So I'd just like to raise a last point to this, is that this whole insurance scheme is not just for the sake of looking at the welfare of the farmers itself, but I think on a bigger macro picture, it also wakes up a lot of other stakeholders in the supply chain, particularly also with the regulatory agencies. Because when you have an insurance policy and something goes wrong, and if it is the regulatory agencies who are at fault, now they have to become accountable. And I think that is something which is not happening in the past, because they can exclude themselves out of the whole equation of accountability. So insurance scheme is going to become one of these areas that can make people aware that everyone, including the government agencies and the farmer themselves, and even the lorry driver, will have to become accountable. So you cannot drink and drive a lorry of bananas from one place to another place. And if something goes wrong, the insurance company will come after you. So I think in that sense, we are talking of how the insurance scheme can improve productivity. And I like to also add that it also creates a greater transparency of responsibility by every stakeholder in the supply chain. Am I right in saying that? Yes or no?
Yes, it's very true. It's a very good last question actually raised, and I have actually dealt with something similar on that for an Indonesian partner that we have. So we were trying to create an end-to-end solution for halal. It was on a halal topic where we wanted to do insurance product to ensure end-to-end solutions, where from the transport, logistics, farm, warehouse, up to the level. So there are a lot of stakeholders involved in terms of the product traveling one place to another. How do we manage who's in fault, what happens, and about recalls. So there's a lot of areas, smaller subsectors of insurance can be embedded if we have the right stakeholders coming in. So
Yes.
the idea of having the Agrofood on a national level is to cater all the stakeholders involved in this business and what are their responsibilities and who will be managing and providing us risk mitigation portfolios. What are the farmers supposed to do? What are the marketers supposed to do? The traders or even the government agencies overlooking the farmers, what are their responsibilities? So
Absolutely.
what will happen is actually the insurance will be a backbone of the existing policy. That is the right way to explain this. Yeah.
Okay, that's very clear, very good. Well, Dr. Ryan, thank you very much for
Thank you.
sharing your thoughts and your knowledge on insurance. I'm sure many of us have thought about this before, but too frightened to ask the right questions. So, ladies and gentlemen, you would be able to get hold of Dr. Ryan. Come via the MPC Agro Food Productivity Nexus, and we'll be able to link you together with Dr. Ryan, and come to the administrator. We'll also be able to direct you. I think there's one more slide that, yes, that's right. Ladies and gentlemen, I'd like to introduce one other product that has come forth from the MPC Agrofood Productivity Nexus, which is what we call the VAC, Virtual Advisory Clinic. That's right, you've read it correctly. So beware that this is a clinic, not a hospital. So if you have a major a farm issue, then you need to go to the hospital. You really need a specialist. But when it comes to issues like you have problems with the pest productivity of your crop, and you like to talk to somebody in the business, or you have some marketing issues, you need some advice, or perhaps you need to be able to connect to a wider scope of stakeholders in the business of the agri-food production, processing, or even in the marketing. The VAC clinic is the area that you can be your first stop to getting advice, getting assistance in form of technical and in form of knowledge. But rest assured, if you have any financial problem, the clinic is not a place where you can get some loans. You need to look at the banks. You need to look at the government schemes. So sorry about that. But the advisory clinic is a first step for you to move forward so that you realize that you are not alone in this problem. The specialist may or may not be able to provide you with a succinct answer to your problems, but I am sure that even if they start talking to you, you will be starting to think of some of the other activities or other linkages that can help resolve your problems. So I think this is a very, very effective a tool of the Agri-Food Productivity Nexus of MPC. And again, we will be launching this officially in a couple of weeks, and we will be sending out through the social media and all the other media forms to advise you how and in what manner that you can approach the VAC, Virtual Advisory Clinic. We want to consider this as virtual simply because sometimes to make a physical drive to your farm may be problematic even after the MCO is lifted, which we can imagine. So I think we should take advantage of this virtual accessibility, and I think it's going to be very, very effective. So if you do have a problem, approach the AFPNs on this clinic tool. So I think that's all we have, and I think we've kept very good on the timing. I like this drawing here. We've got three kinds of farmers: poultry, fishermen, fishery people, and the crops people. And let's understand where we come from. So thank you for attending this webinar, and I hope we have all picked up something from Dr. Ryan. And we look forward to see you again in another one of our other webinar programs. So thank you again, and thank you again, Dr. Ryan.
Thank you, Mr. Kim. Thank you, MPC. All right, bye-bye.
Thank you, Dr. Ryan.
All right.
Okay, bye-bye.
Right.
Yeah. Thank you, Hisham. Azlin.
Yes, thank you, Dr. Ryan.